In this presentation, we will continue on with our S Corporation Comprehensive Problem, part number 15. We're going to be analyzing the Schedule K and the M1. We'll be using tax software in order to do this. We're going to be using Lacert, owned by Gov. As you'll recall, we've entered all of the data, or generally all of the data, the financial information from our Excel worksheet that we have populated with the client data, the financial statements, into the system, and we have verified these amounts down below in terms of reconciling the income amounts as well as reconciling the balance sheet. So now what we want to do is go back over to the 1120S and consider the two kind of reconciling forms to get a better idea of what they are doing exactly. If we go then to page 3, those forms are going to be the Schedule K. Remember that the Schedule K is not the same thing as the K1s. They could be kind of related in terms of the information that will be there, but just note that we're on the Schedule K, which will typically be attached, will be attached to the 1120S as opposed to the K1s, and the K1s are going to be what we provide to the shareholders, the owners of the S Corporation, to help them put this information on their tax returns, individual tax returns, that being their individual Form 1040. Now what we want to note is if we look at the Schedule K, we have the adjustments within the Schedule K, and those are going to be the adjusting type of transactions. And if we look at our worksheet over here, we noted those are going to be the ones that we noted in blue. And then if we go back over and look at the M1, we also see these adjustments here. And these are also adjustments from basically the book numbers to the tax numbers. So they're broken out between the Schedule K and basically the M1. We reflected those in red on our worksheet. So let's analyze this in a bit more depth. So I'm going to go back over and notice if we go to line 1 and scroll down, we have the line 1 is the 69,510. We can think of that as basically the tax income on the first page of the 1120S. If we then go to page 3, we have a reconciliation. At the start, we have that same number, the 69,510, and we're going to reconcile that to page 4, which is going to reconcile to the 79,510. Now, there's kind of a problem here because what we would like to see is we would like to reconcile our book number to basically whatever other number we need to reconcile to. So here, we're not reconciling from the book number, we're reconciling from the tax number to the 79,510. And then if we go to the M1, we are reconciling from the book number to the 79,510. So the Schedule M1 is the one that's going to reconcile from the book to the 79,510. And then if I go to page 1, however, we're showing the 69,510. In other words, if I go to the M1, we're going from the 85,710, the book number, to the 79,510, but the 79,510 is not what's on page 1 of the 1120S. In order to get to that number, I need to get from the 69,510 that's on page 1 and reconcile that to page 4, which is the 79,510. Okay, so let's think about how to do this. If we're going to say, okay, we know what the page 1 number is, 69,510. That's what we're reporting here. That's what we got on our second number. So here's our book numbers. And here's what's on page 1120 of the tax return, 1120S. So now the Schedule K is taking that number and reconciling it to the bottom number on the Schedule K, which I believe was the 79,510. So let's look at that process in a bit more detail. So what does that reconciling consist of? So I'm going to go to page 3. There's the beginning number that we had from the 1120S. Then we had this adjustment up top. That's the interest income. So I'm going to go back over. Okay, so we're going to take this 69,510. I'm going to pick up the interest income then. Here's the interest income. And I'm going to flip the sign here. So this is going to be added. We're going to add that back. So there's the 69,510 plus the interest income. And then I'm going to go back over here. The next one we have is the dividends for the 14. So dividends at 14. I'm going to say that equals the dividends, that's this adjustment, negative of that number. So that's going to be one of the reconciling items. And then I go back over here, and then we have the charitable contributions. Charitable contributions is this one. And so I'm going to say negative of that number. So there we have that. I'm going to make these blue. So I'm going to make these items the blue that we were seeing. and we could put, you know, the lines around the whole thing so far. And so, and we could indent these. Let's go ahead and indent that. And so if I was to, did this go the right way? We took the charitable, should be negative of this number. So there we have it. And then I'm going to sum these up. And that's going to give us our 79,510. So there's the 79,510. And if I go back over here, the confusing thing is that'll make sense. But if I go to page 4, you see all these other numbers here, which basically aren't involved in the bottom line number. This is more kind of the information. The 79,510 is calculated with those core numbers. So just keep that in mind when you're trying to reconciling these items. You're really concentrating when you're reconciling the items on page 3, because these are going to be the ones that are going to be within that calculation. So we have these adjustments here. Then page 4, we have this information, and we've reconciled now to the 79,510. Okay, and then if you go to page 5, now you've got the M1s, and the M1s are pretty straightforward because these numbers, they do what you would expect them to do. They are all part of the reconciliation process. We're basically reconciling from the 85,710 to the 79,510. The problem is that neither of these two numbers match what's on the first page of the 1120S necessarily. So we've got the 85,710, that's the beginning book value that we have here on our worksheet. And then we have the ending number, which is the 79,510. 79,510 is not what's on the ending 1120S necessarily. So if I go up to the 1120S, then we have the ending number of the 69,510, which isn't on the M1, right? So I could say, all right, I'm going to have to do this in 2 steps. Here's the beginning number from the books. I'm going to reconcile that to basically the first page of the 1120S to the 69,510. Then I'm going to take that 69,510, which will be part of the Schedule K, beginning number of the Schedule K, 69,510, reconcile that to the ending number of the Schedule K, which includes the items on the page 3, and then I go to page 4, the ending number is that 79,510, so we have those reconciling items, which would be the blue numbers up top. These blue numbers will reconcile there, and then we have that 79,510, which if we go to the page 5, is the ending number reported on page 5. So now we're going from the 85,710 to the 79,510. So that's all the way from the book numbers to the 79,510. So you could think of that as basically 2 components here, or you could do the one jump from the book numbers all the way to the 79,510. Now when you do that, you got to be careful because, you know, the M1 adjustments are down here. Notice what's not included. I don't have anything in the depreciation number. So if I go here, we've got the 2, the 4, the 2. I don't see this 10,200. Why? Because normally when I record the depreciation on the tax basis, I would think the other side would go to the accumulated depreciation, put it into the balance sheet for the tax purposes. Now, of course, you don't necessarily need to do that. In other words, this credit right here, I usually put to accumulated depreciation, and if I go back into the tax return, you'll note that the Schedule L doesn't reflect the tax depreciation, it reflects the book depreciation. So if I was to think about the building, the depreciation, the 33,882, there's the 33,882. So you could say, I don't really need to put this here for tax depreciation. You could have reported this instead as an M1, which is basically how it's done on the tax return, and put it down there. So that might be, you know, something you want to do. Otherwise, in order to do this reconciliation, you'd say, okay, here's the M1 adjustments, those 3, and I'm picking up this adjustment up top to accumulated depreciation that I put it to for taxes. And those are basically the reconciling items. So you can see the one jump over here, or you could basically see it in 2 jumps, taking it from the book value to the 1120S first page, and then to the 79,510. So you can see, you know, a couple different ways that you can reconcile those items. And notice that in prior worksheets, I just added this this number up top. So we didn't have that in on the prior worksheets when I worked through them on these. Maybe I'll add that to the example so you can see this one jump from on all the M1s that should be added up. And again, you could consider building this worksheet to be putting this credit as opposed to putting it up here in accumulated depreciation for taxes. You could be putting it down here. I'm just kind of used to putting it up there. $69,510. In other words, if I go up to the 1120, then we should see the $69,510 there. That makes sense. Going back to the Schedule K1, 16, we're going to be considering the Schedule K1. We will be using tax software, that being Lacerte. Lacerte owned by Intuit, the owner of QuickBooks. Other types of tax software in terms of the data input and generation of the forms will be similar. If you would like to put this information directly into the tax forms, we will provide those, and you can also find them on the IRS website at irs.gov, irs.gov. Here we are in our Form 1120S. You'll recall in prior presentations we've entered the data. Last presentation we considered the reconciliation of the Schedule K and the M1s. Now this is going to be different. This is the Schedule K1. So now we're looking at the Schedule K1. This is what we provide to the shareholders that they can then use to enter into their personal taxes. So recall that when we talk about an 1120S, we're talking about a flow-through type of return. Therefore, we're entering the information into the 1120S. Then we need to report that information to the shareholders in such a way that they can report their income properly into their tax return, which will be the 1040. We're going to do that with the Schedule K1s. So we should be able to kind of reflect the Schedule K1s and see what will be included as we break out the income that's reported on the 1120S to the Schedule K1s in some way, shape, or form so that they can then report it on their Form 1040. You'll recall we have the two owners. Now, to enter the two owner data, we have to enter their percentages. So in the percentage shares, we're going to say that they break out the income on a 70-30 basis. So that means that we can enter the information basically into the 1120S, and then we can break this out evenly to the shareholders, and that's pretty nice about an S corporation, because usually there's one class of stock, so the distribution will be fairly easy to break out in that format, because we could basically put it into the 1120S and use a straight ratio to allocate that information then to the owners of the organization, the shareholders of the owners of the S corporation. So we're going to say 70 is going to Tim and 30% to James. So if I then go to the forms up top and we look at the Schedule K, then we can look at these line items, and they're going to take these line items and put them into their respective 1040s. Now, we're relying on the software to some degree to populate this, so I'm going to have a disclaimer there as we look at the Schedule Ks. But once you look at these, you can then analyze the Schedule Ks and try to say, okay, well, where are these numbers coming from? One easy way to do that, notice you're going to have the information basically on the left-hand side, and then we're going to have the numbers basically on the right-hand side. So if we want to analyze these numbers and say, well, how can I tie these numbers out to basically what we would recognize on page 1 of the 1120S or on our worksheet, we could say, all right, here we have the ordinary business income, we have the 48,657, and I could say, I know this person is a 70% owner, so if I want to tie into the total number, what happened is we took the total number times 70% to get to this number, so I could simply divide by 70%. Say, all right, does that match? Well, let's do that one more time. I've got the 48,657 divided by 0.7 or 70%. That gives us the 69,510, which would be ordinary income. If I go back to our worksheet and say, does that make sense? Yeah, that's the first page of the 1120S. That's the 69,510. So the 69,510, in other words, if I go up to the 1120, then we should see the 69,510 there. That makes sense. Going back to the Schedule K1, I'm going to say, all right, interest income. I've got the 2800. So if I take that 2800 divided by 0.7, we've got the 4,000. All right, does that make sense? 4,000 for the interest. If I go back over here, that's going to be the 4,000 there that we broke out for the interest. So that makes sense. And if I go to the ordinary income, if I can recognize that number, if I say the ordinary dividends and qualified dividends, the dividends in essence, the 9800 divided by, is that divide? Yeah, 0.7, 14,000. That number looks familiar. So we're going to go back over here. That's the dividends. So okay, I could see where that comes from, and then I could scroll down, and I'm not gonna go into detail on 15A. If you have questions about these boxes, note that you can go into the detail by looking at the instructions on the IRS website for this form. We'll also provide those. So if I wanted to look in here, this is the form from the IRS website, and I scroll down and say, okay, here's the line by line information. If I look at 15A, we have got post 1986 depreciation adjustment. And this is one of those types of adjustment. If you're filling out by hand and not using tax software, it could be difficult to pick this one up. The software, when you generate the depreciation with software, can help you to pick that one up. And then I'm going to go back over and we're going to scroll down. We got the other deductions down here. So if I go to line 12, if I go back over here and say, all right, let's 12, line 12A, and I scroll back down, where's 12A? That's going to be the cash contributions. Oh, okay, that would make sense. And if we go to the cash contributions, I'd say, let's see if that ties out to what I think, 5600 divided by 0.7, 8,000. Does that make sense? Cash contributions, 8,000. We go over here and we're going to say, yeah, that's the 8,000 there that's being broken out. All right, that makes sense. And then if I go back over and we could do these for 16. So if I said, all right, there's the 1,004, 1400 divided by 0.7. That's going to be 2,000. If I go to the instructions for 16A, tax exempt interest. Does that make sense? Tax exempt interest. We had the 2,000. All right, that makes sense. I go back over here and I see the 4,200 here. So I'm going to say, all right, 4200 divided by 0.7. That's 6,000. I look at the instructions, 16C, which is the non-deductible expenses. So if I go back to our data here, looks like that's probably the 4,000 here and the 2,000 to get us to that 6,000. So that's related to the meals and the bad debt, most likely. I'm going to go back over here and say, then we have the 46.2 in D. So if I say, all right, there's a 46.2 and divide that by 0.7, we get to the 66,000. So 66,000 for D. Let's go to 16D. I'm going to go back over here, and that's going to be the distribution. So that's going to be the distribution. And you'll recall in our data that there was a distribution, basically a draw, kind of like a dividend, the money that was given or coming out of the organization. And so that's going to be the total distribution was the 66,000, and we specifically put 46,200 for Tim and the 19,800 to James. So I'm going to go back over to the tax return. So here's the 46.2. That makes sense. Now, 17 is where I want to put more of a disclaimer on, because there could be changes to the line items in 17 due to the recent tax law changes, and there can be some nuances with regards to those changes depending on the type of industry we are in and so on and so forth. So you probably want to do some more research to fully understand the items that are going to be in 17. You could start by the same process that we have done here. Take a look at the instructions and then divide by 70%. You can figure out where these numbers are coming from, and then you probably want to do some more research so you can understand the different industries that people are in and possible changes that could take place in the box 17. Now, we could do the same process for James here, of course. If we go to James, we got the ordinary income. We could see that he is a 30% owner. So if you wanted to tie all these out and try to say, okay, how do I tie that 20,853 to a number that would be on the first page of the 1120S with a number that I think I would recognize from the total number, you would just take that 20,853 divided now by 0.3, not 0.7, but 0.3. Let's do that one more time. I think I multiplied 20,853 divided by 0.3, and that gives you that 69,510, 69,510. If I go back to our numbers over here, that's going to be this number, the 69,510. So you could basically go through this whole form in a similar process and tie that out by just dividing by the percentage. That'll be the number, of course, that's on the 1120. And you can see that's the 69,510 here. So you can do that same process, and that way you can basically get an understanding of what's being reported on the Schedule K1. Now, the next thing you want to consider is the Schedule K1. What's going to be the impact of the Schedule K1 on the individual partners? Because if you're working in the tax office, you're probably doing the S corporation. You might be doing their individual returns now as well. So this is a flow-through entity that would then flow through to their individual returns. And if you're doing tax planning or something like that, then of course you want to think, all right, what's going to be the impact of this K1 as it flows through to their individual Form 1040s, and the K1s is going to be the information that will reflect that. So if you're doing the individual returns, you take this K1, put it into the individual return for the 1040. If you're using the same software like Lacert, you'll actually have a link process, and you can actually export this information automatically, so it'll populate into the Form 1040, which is nice. Gov. Here is our 1120S. We've put the information into the 1120S for the S corporation. Now we want to consider the basis calculation for the shareholders. This is going to be something that is going to be the responsibility of the owners of the corporation, and it's important because it could limit things such as being able to deduct, say, a loss on their individual tax returns from the corporation on their individual 1040s as it flows through to the 1040. Now, oftentimes the owners of the organization or the corporation may be dependent to some degree within the tax preparation to help with the basis calculation. If you're taking over a tax preparation from an S corporation that had been prepared by a prior system prior to this, then you may want to get those schedules as well. It'd be nice to have the basis schedules as well so that you can put that into the current system. If you're starting a new S corporation, then you would like to, it'd be nice to be able to track the basis calculations for the shareholders as well. Once you do the individual returns, the basis calculation is going to be something that's going to be necessary to do when you roll over the K1 to the 1040. That's going to be important. A lot of software will typically have something that will help out with the basis calculation. So here's going to be what it has in Lacert. So within Lacert, most of the adjustments to the basis will then be added to this calculation if they've been properly input into the tax system. However, we're going to need that beginning basis. So if it's the first year that you put the S corporation into the system, then you're going to need that beginning basis that hopefully you can get from the prior return or the prior tax preparation to put that beginning basis in there, and then the system will hopefully help you out to calculate the basis. So you'll recall that we have a stock basis and we have the debt basis. So the stock basis is going to be up top, and that's what it's going to be consisting of for this example problem. We'll have to look at the beginning balance, and then we have the adjustments. The adjustments here for the ordinary income. And again, you could do a similar kind of process that we did with the K1 forms. You could say, okay, here's the 48,657. This is Tim, who's the 70% owner here. So I'm going to divide by 0.7, and I get to the 69,510. That 69,510, if we go back then to page 1, is going to be the 69,510 ordinary income. So that's one way that you can get a feel for the basis calculation and how it would tie into basically the activity that we've been putting into the 1120. You could take all these numbers and in essence divide them by the percentage that is allocated to the owner, in this case 70%. So then we have the net portfolio income, the tax exempt interest here, and that's going to give us the total increase. Then we have the decreases, which include the non-deductible expenses and the charitable contributions, and that's going to be and then of course our property distributions. That's going to be the amount that was taken out, kind of like a draw for the S corporation, similar to a draw distribution of the 46.2, and that's going to give us our decreases of the 56,000 for the stock basis at the end of the year, 6,657. Now again, that's basically the change because we don't have any beginning balance here. So what we would need if it was a new organization are those beginning balances. We're just going to put practice problem. In our practice problem here, we're going to say the basis was the 247,387 for Tim. So I'm going to jump to the beginning basis here, and I'm going to say this was 247,387, 247,387, and then I'm going to go to James, and so of course that'll change the basis calculation here to the 254.44. Now we don't have any debt basis in this particular problem, so we're restricted to the basis of the stock basis. If we then go to James, similar kind of situation, you can go through the basis calculation once again and divide each of these numbers by 0.3, because James has a 30% share, so 20,853 divided by 0.3. Let's do that one more time. And that doesn't look right. 20,853 divided by 0.3 is there's the 69,510. So once again, you could take a look at these changes that are being generated from the software, tie them out to the related parts of the 1120S by dividing out by the percentage shares here. So then I'm going to put the beginning amount up top. So we'll put the beginning amount for this stockholder, James, and that is going to be the 106,022. So 106,022. So there we have that. I'm going to go back to the forms, and there we have that. Now, you may even want to track the basis on a separate schedule. That might be useful to do, but if you have the tax software, as you roll over the tax software in something like Lacert, the basis calculation should also roll forward with it, and it should allow you to help to track that. Obviously, if you're going from place to place, one software to another, or from one firm to another, or if this is the first time you're going to enter the tax return for a continuing client, then you want to consider the basis calculation, and you're going to need that again when you go into entering the data into the Form 1040, because the basis could limit things like losses that might be transferred over to the individual tax return. In this presentation, we will continue on with our S Corporation Comprehensive Problem, part number 19. We're going to take the Schedule K and transfer S Corporation as a flow-through entity, and therefore we're going to have to file the 1120S and then report that information using a K1, which is kind of like similar to like a W-2 form. It's reporting the income that will then go to the individual shareholders, who will then take that and input it into their Form 1040, reporting the income that is allocated to them from the S Corporation. There's a few ways that we can do this. You can actually print the Schedule K1 and distribute that to the shareholders, and they can then take that and add that information, put the data input from it into their tax system. Or if you're using the same software, in other words, if you're doing the tax return on the 1120S and for one or more of the individuals that own it, then you can use this tax system. If you're using Lacert, some other tax software probably does this too. You can export from the 1120S to the 1040 for the owner. So we'll take a look at that. We'll take a look at the distribution process. We'll take a look at the Lacert transfer process, the exporting, and we'll take a look at what the effect will be of the Schedule K from our practice problem on the individual 1040 of an owner of the S Corporation. Here we are with our 1120S. We're going to then go to the Schedule K1. We have the Schedule K1 for our owner. This is going to be for Tim Jones. Now, we have the income reported here. We need to take this information, distribute it to the owner. The owner then is responsible for putting that into their individual tax return. But what if we're doing the taxes for the owner as well? We're going to do the S Corporation, and then we're going to do the 1040, or if it's our return, then the S Corporation needs to be done, and then the individual 1040. We can export this directly to the 1040. Let's first take a look at the information for the individual return. I'm going to go to the individual returns now, and we are going to be considering here the Tim Jones. So we're going to go into Tim Jones, and I'm going to take a look at the forms so far. You'll see that single individual Tim Jones, we don't have any information in it at this point. No income at all, and all we have there is the standard deduction. Now let's go back to the S corporation and see if we can simply export that information to this location from the S corporation to the 1040. Now to do this, I got to go to the Schedule K1. I want to take the Schedule K1 miscellaneous, and then I'm going to say that I need to export this. So I want to export this data to the 1040 form. So I'm going to check this off for Tim Jones. Once that's done, we should be able to do the exporting process. And that can be found in the tools up top, and we're going to go to the K1 data export. So K1 data export, and then you'll see this link here. So we're going to export this out, and I'm going to say, all right, export that. The export has been complete, so I'm going to say OK. Then I'm going to go to the client up top, and I'm going to go to the client up top and go to the individual. And now let's go back into that same return that we were taking a look at for Tim Jones. If I go into it, it's going to say, here's the pop-up saying that there has been exported information. That's what we want. This is the federal K1 input. So we want that. I'm going to say accept that input. You're about to overwrite. I'm going to say yes and OK. And then we can go back up and see the results. So if I go to the forms up top then and scroll down, then now we see this information being populated. So, and all this information then, we saw it was blank before it's being populated by basically the K1 form. So if we go back to the K1 form, then we see line 1, ordinary business income. That's the 48,657. We see that populated on the tax return there. If we scroll back over, we then see the interest income, the 2,800. There's the 2,800. And then we see the ordinary dividends and the qualified dividends. There's the qualified and ordinary dividends there. So that comes out to the total income of the 61,257. We have a single individual, so the standard deduction is going to be that 12,200. We also have the qualified business income deduction. Now, this is something you're going to want to research and make sure that you're applying this correctly, because it's a fairly new law and it can be fairly nuanced depending on the type of industry that you are in. But it is being calculated based on the business income, you can see, of the 48,657. 11A then being the 20,051, which makes the taxable income the 41,206. Then if we go to page 2 to actually calculate the tax on it, we have the 3,852 on the tax calculation from it. In this presentation, we will be focusing in on FICA taxes, Social Security, and Medicare tax. But then we think about it as self-employment tax, and you'll have to fill out another schedule if you had a Schedule C type of business, a sole proprietor type of business attached to your 1040, that being a Schedule SE, which is business income and expenses that would pull over here, and then that would pull over then to page 1 of the 1040. So we've got the 100,000, that's our only income, so we can focus in on that from a Schedule C business. And then we're going to have the adjustments to income. That's going to be the 7,065. Now this is where it gets a little bit complicated, because note that when we think about the income for the Schedule C, we're going to have to pay income taxes on it, but we're also going to have to pay the Social Security and Medicare, the FICA taxes. Those will be calculated on Schedule SE. So if I go to Schedule SE, we have the self-employment calculations. Now, if I scroll back down, remember the net income we're saying is 100,000. That's reported net on the Schedule C. We're going to be calculating the FICA taxes on that.